This is a brief overview of the initial measurement and recognition of debt and equity investments. Similar to what we've seen in prior chapters, initial measurement here is going to be at fair value. But let's take a minute to talk about the 5 different categories of investments that make up Chapter 12, and then we will talk about the very simple initial entry. For debt securities, we're going to focus exclusively on bonds, the same bonds we learned about in Chapter 14. When a company buys bonds, GAAP requires that the management categorize the bond based on its intentions in terms of holding the bond. If management is investing in the bond because of an interest in the cash flows over the entire life of the bond, the category they designate is held to maturity, basically stating that their intent is to hold the bond instead of selling it before maturity. If management buys bonds for the purpose of making capital gains, basically hoping for the bond price to move up so they can sell the bonds for a profit, and does not intend to hold them until maturity, they designate the bonds as trading securities. This implies a shorter-term horizon and a clear intention of trading on the price of the bond. If management buys the bond because it fits in nicely with their overall risk strategy, maybe the bond currently provides a nice balance of interest revenue to some ongoing expenses, but they don't expect to hold it until maturity, and if circumstances change, they may sell it, then they designate the bond as available for sale. As it sounds, this is kind of the wishy-washy middle. These 3 categories will not apply to investments in stock. They only apply to debt securities. For equity securities, we are talking about buying stock. When a company buys stock, GAAP aligns the accounting treatment with the percentage of ownership the company holds. If management buys stock and its holdings represent less than 20% of the total outstanding stock of the investee company, GAAP requires that the company treat that stock as a passive investment. Your book talks about this category as when the investor lacks significant influence, or fair value through net income. It's a very descriptive title. I think passive captures the same idea. You hold the stock, but not enough to tell the company's board what to do. If management buys stock and its holding represents between 20 and 50% of the total outstanding stock of the investee company, GAAP requires that the company treat that stock as an active investment. Your book talks about this category as when the investor has significant influence and requires the equity method be used. I think active captures the idea. You hold enough stock of that company that the board of directors will listen to what you say needs to be done. So there are 2 equity investment categories. They will not be used for debt securities. FYI, if management buys stock and its holdings represent between 50 and 100%, then the treatment may move from the equity method to a method called consolidation. This is a 4402 Financial Reporting 4 topic we will not talk about. Basically, though, it involves combining the balance sheets of 2 companies. Remember when we talked about goodwill? Well, if you see goodwill on a balance sheet, then there has been some consolidation going on. I know what you're thinking. Wait, our project has goodwill on it, but we didn't do a consolidation. You would be correct. That's because I'm keeping the mechanics of your project simple. When you get to FAR 4, you spend the whole course on consolidation. Okay, so back to the very simple entry. When we first buy a debt or equity security, you will see that you debit the investment account for the fair value of the investment. If it is a debt security, you'll debit bond investment at the face amount, and that's my dog, and then have a discount or premium account, and you'll credit cash for the fair value of the investment, which will obviously match the amount of cash paid. It's very simple. You debit the investment account for the fair value and you credit cash. Please ask any questions.